Despite increased competition in the EV industry, the demands for Tesla's EVs have been going up significantly in the last few years. And while there are previous indications that Tesla's order rate has been surging up to record highs in its numerous markets, especially as gas prices went up earlier this year, there are also claims that the company may be experiencing a drop in demand. Hey guys, welcome back to Everything Tesla Stock. Aside from inflation, the supply chain crisis is one other challenge for EV companies and automakers this year, as many are struggling to navigate through the extremely difficult market conditions to ramp up electric vehicle production. Tesla has recorded enormous demand for its EVs in the past years, and although there is a fast transition from ICE cars to electric, which has increased Tesla's EV markets, some still believe that demand for the company's EVs is slowly crashing. Could this be the actual state of Tesla's car demand? Well, we're about to find out. But before we do, don't forget to like and subscribe and turn on notifications to keep up to date on everything going on with Tesla. Tesla has been a leading car company for a decade now, and it is not slowing down as it is continuously ramping up production for its cars. However, there are doubts as to whether Tesla still has enormous demand for its EVs as it had in previous years. According to Morgan Stanley analysis Adam Jonas, Tesla is very likely experiencing demand destruction. The analysis reduced his base case price target for Tesla stock from $383 to $350, stating that the drop in demand for Tesla cars will be reflected in shorter lead times and price declines in the coming months. But luckily, this has yet to happen, which is one reason why some other analysts believe that Tesla actually has no demand problem. If demand were a problem for Tesla, the EV company would have pulled certain demand triggers by now, the biggest one being its pricing. With lower demand, Tesla is expected to lower the prices of its cars, but contrary to this, Tesla's prices have been going straight up over the last 2 years, and its gross margin on vehicles is at an all-time high, and there's no sign of car prices coming down anytime soon. Even though Tesla can afford to reduce prices a bit if it wants to, this is yet to happen. And suppose the car company does reduce prices later on, then that's going to be a big demand driver, and it's not something investors should be worried about. Aside from Tesla's stable car prices, the car company has been performing incredibly well in most of its markets. In a recent tweet shared by Tesla New York, Tesla finished in September as the best-selling car in Germany. According to KBA data, Tesla registered 9,846 Model Ys in just 1 month in Germany. A total of 224,816 vehicles were registered in September, including 44,389 new SUVs. With the number of registered Model Ys in this market, the car model alone represented just over 4.5% of the German car market and over 22% of SUV sales. Tesla's Model 3 also performed well this month, with about 3,878 registrations made in Germany. Both Tesla's Model Y and Model 3 represented over 6% of the German car market, which is pretty good. And that's not all. Model Y was the best-selling SUV in China, in September as well. According to data from the China Passenger Car Association, Tesla sold 46,694 Model Ys, which is about a 41.4% increase over the number of sales about a year ago. With this figure, Tesla was able to stay ahead of BYD Song, which took second place. This increased number in car production is the result of a major ramp-up across most of Tesla's gigafactories. Tesla's Model Y production has increased significantly at Tesla's factory in Shanghai, given the recent production line upgrades. If this is maintained, the electric SUV should be able to hold onto its second-place ranking for the remainder of 2022, and could reach first place in the final quarter of the year. Likewise, Tesla delivered 83,135 China-made EVs in September, marking an 8% increase from August and setting a record for Tesla's Shanghai factory since production began in December 2019. After suspending most production at the Shanghai plant in July for an upgrade, Tesla quickened its China deliveries, bringing the factory's weekly output capacity to around 22,000 units. Compared with levels of around 17,000 in June, there is no doubt that car production is on top gear in this facility. Also, Tesla increased production in its new factory in Berlin. The car company confirmed earlier in October that its gigafactory in Berlin has been able to ramp up production to 2,000 electric cars a week for the first time. This is an incredible milestone for Tesla, and with increased production at this site, the car company can achieve its existing goal of reaching a production rate of 5,000 vehicles per week. Alongside Germany and China, Tesla cars have also dominated several other automotive markets. The Tesla Model Y being the top-selling vehicle in New Zealand and the second best-selling vehicle in the UK marks a significant turnaround for Tesla in Europe generally. Although some analysis believe that Tesla would lose some market share if more EVs were inducted into the European market, this does not turn out to be the case. Tesla has actually in fact shown incredible resilience against new competition. Europe is a large market for EVs, and the demand for electric vehicles here is far higher than almost anywhere else on the planet. There's also far more competition as more brands are constantly hitting the market, and hence, it's quite an achievement for the Model Y to be the best-selling vehicle in this location. At the event held by Tesla at its Berlin Gigafactory in August, New Street Research managing partner Pierre Ferragu noted that he sees Tesla facing unprecedented demand in the future. According to him, demand is way above what he hopes it were a few years ago. And electric cars are becoming too popular for Tesla and its competition, and market shares are going to be mostly dictated by their ability to ramp up car volumes. He also wrote that compared to Tesla's factory in Vermont, Berlin, it is actually more efficient. There are other indicators then that Tesla has got good demand, and there are also certain factors that may cause doubts, such as waiting time for Tesla's EVs in certain markets, and Tesla also has some drops in wait times for deliveries on new orders for some of its electric vehicle models, and some people believe that this may indicate a drop in demand. Responding to this, Pierre Ferragu stated that it is quite insufficient to mark a drop in Tesla's wait times as a drop in demand. He added that from his analysis, the recent sudden 40 to 60% drop in wait times for new orders only reflects a normalization of the backlog and not a declining demand. He also further stressed the importance of understanding wait time volatility. He wrote, "Even with orders steadily growing, irregular increases in production capacity mean wait times will remain volatile. Our analysis clearly suggests orders are re-accelerating this quarter, despite the drop in indicative wait times." Ferragu expects an increase in orders and deliveries, while both the end-of-quarter backlog and wait times continue to drop during the rest of the year. With production ramps at Tesla's Gigafactory in Berlin and Texas, the automaker is experiencing better production localization, which is helping to reduce wait times. So contrary to popular belief, Tesla does not have a demand problem, but may be instead facing unexpected delivery issues. In August, the automaker decided to stop taking new orders for its Model 3 long range, one of its most popular vehicles in the US and Canada. This was to avoid creating delivery timelines that are super long for consumers. Needless to say, there is a current rush in order for electric vehicles. As the technology becomes more mainstream, well, more countries are actually going to continue to implement laws that support the production and sales of these cars. In the short term, EVs will likely grow in popularity due to gas price increases and the new federal EV incentive expected to become law any minute now. The expected tax credit may also be another reason why demand is perceived to be low, since buyers may be waiting for a time when this credit is implemented and EVs are sold at a lower price. For a long-term Tesla bull, it's not worth worrying about Tesla's demand until the automaker starts to pull on some demand controls. As electric vehicle demand continues to skyrocket in several markets globally, and many national governments further incentivize EV purchases, Tesla is perfectly positioned to take advantage of the demand. Also, several other factors which have pushed Tesla's sales far higher in Europe over the past few months, like a hike in gas prices, are going to continue to boost demand for Tesla cars. And even if Tesla does pull demand triggers, like lowering the prices of its cars, it's still going to be for the benefit of the car company, and will also fix any demand issue, if there is any at all. What do you think about Tesla demand? Do you think the car company's got a demand problem? Let us know down below. And if you want to know more about what Tesla's been up to in the last few days, go ahead and click on this video on your screen. See you there.